Welcome back. So today we are looking at Medical Properties Trust MPW, looking at the bull case. Yesterday we looked at the bear case, reasons why you might want to be cautious and take some care about the risks. Today we look at the potential upside and the investment thesis going forward for the bulls. Let me know in the comments if you're invested in MPW just like I am. This is a globally diversified medical property REIT specialist. Now when we're thinking about the bull case, we're essentially looking at this history here. So I've pulled up fast graphs to get a good visual representation of what's been going on with this company historically. So their IPO was in 2005 and you can see obviously they were damaged through the global financial crisis, hitting a very, very low price to AFFO, the price to adjusted funds from operation, which is kind of like the PE for a REIT. And you can see, obviously, as the bears will point out, there's been a very, very, very big decline in the last year in 2022. But what we can see during this period is, fundamentally, other than the decrease here, is a fairly consistent increase here in the earnings, represented sort of by the orange line there, and this white line here over the last decade, a nice strong increase in the dividends being paid. Now we can see here as well, across the bottom, dividends from 80 cents to 84 to 88, 91, 96, $1, $1.02, $1.08, $1.12, and then estimates for only $1.16 dividends going forward. So, is that a good deal? Well, the dividend yield at the current price is 10.5%. So we're talking about quite a nice starting dividend yield. Now, assuming they don't cut the dividend, and the bulls will claim that the bears will claim that they're going to be cutting the dividend, there's going to be no choice. The bears will claim that Steward Health, for example, is going to go under, and that's 30% of MPW's property. But if we actually look at these analyst estimates, they're estimating a slow and steady increase still moving forward. So, what the heck do analysts know? And the answer is they are fairly good at what they do. They're fairly astute at assessing the situation and the circumstances for a particular company. So here we can see that the company appears to give fairly good guidance for over a 2-year period with a 20% margin for error. Analysts are hitting, or the company results are hitting analyst estimates 91% of the time, and only a sort of a 1 in 10 chance of a miss. So the analysts tend to know fairly well what's going to be going on with the company 2 years ahead of time. So this is a company that's fairly predictable, fairly well run, and it provides good guidance about what's going on in the future. Ultimately, what does this mean for an investment? Well, a value investor might say, hey look, this has been a well-run REIT. They've got a lot of benefits going for them. They've got strong global diversification. They've got diversification over different property types within the healthcare sector. They operate in 30 US states, 10 countries. They have over 44,000 beds, 434 separate properties. So look, it's a company. Steward Health by itself is not going to terminate the company. It could result in a dividend cut. But at the same time, we've got this nice starting yield, 10.5%. We can see that the analyst estimates here over 6 months ago versus today, the analyst estimates of AFFO have been going down, particularly for 2023, and quite a bit more strongly than the 2024 year, where analysts were expecting quite a reasonable increase in the AFFO, and that's been revised downwards to represent a mild increase in AFFO. So we're talking about not particularly bad years ahead that the analysts are anticipating in terms of AFFO, but moderate increases, if that. Now what this means, if prices return to the historic norms over the last 5 years, prices have traded at 15 times AFFO. If prices return to that level and these AFFO targets are met, it means that we're talking about a likely total return of 120% to the end of 2024. That's an annualized total return of 48%. That includes both capital appreciation and that sweet dividend yield. And this is, in essence, my friends, what the bull case is. we're basically saying, hey, look, the prices, pricing in the risk of Steward. If there is a problem with Steward, we're going to get these earnings, MPW will get the earnings back on track. They'll be able to release those properties. The headwinds in the sector are going to be largely temporary. And what this means is essentially we're going to expect, if we hold this investment for a long time, we will expect the prices to recover. We're going to expect the dividends to bounce back if there's a dividend cut or a dividend pause. And we are going to buy now and anticipate some strong returns in the future. Now, for the ultimate in the bull case, we always should turn to the company's actual investor updates and the company literature, which really gives us a little bit more perspective on what the company sees are the strengths and the benefits of investing with them going forward. Now, obviously, the company's very much aware of the criticism that they've undergone, and they've made this point here. Hey, look, they invest in real estate. They invest in the actual assets here. They're not investing in the tenants, and they're not that, it's not an investment in the financial performance of the tenants. It's an investment in the underlying real estate that we are making as investors. And they reassure us that they've got a really good process here for identifying the really good elements of these different facilities, and they do this. They've got a process, and they've applied this process globally to really identify the right types of properties. And what they note here is that these property attributes and characteristics make it attractive to competent operators. The current tenant, yes, sure, if the current tenant is unable to meet their rent obligations, then they'll be able to find other competent operators, other tenants who will also find these same facilities attractive. Now, we cannot get away as a society, we cannot get away from needing healthcare. We cannot get away from hospitals. These are specialized real estate facilities, and MPW is in a very good position to be able to provide these facilities. So what does this mean? Well, they put out that they've noted that they've got nearly 2 decades of expertise in the sector. They've replaced only 11 operators of 20 facilities. They've done a good job, and they're just reminding everybody, they're reminding the investors, they've got a track record, they know what they're doing, and they've got some elements here as well. And they know that there are some bumps in the road sometimes, and that's not going to be uncommon when we're talking about years, when we're talking about decades. But bumps in the road usually, as they note here, justify a lease termination. So essentially they're saying, hey, look, trust us. We're talking about long-term facility investments that we make as a company. We're talking about long-term leases, and you as an investor, if you've got a long-term horizon, this will work out. Now, on that note as well, if we go back to the recent earnings call, apologies for all of the text, we see that they take a lot of care to make sure that when there are bumps in the road for their tenants, that MPW supports them and helps them out. In the first quarter, they supported Steward and Prospect with loan facilities. They had one non-US tenant that deferred rent over 4 months and is now back to paying 100% of the rent. So they're very careful with the tenant relationship there, and they manage this acknowledging, as they said in the investor relations page material, that there are going to be bumps on the road. As for Steward, yes, they acknowledge that Steward has faced operational staffing issues in the last couple of years. It's been tough in the medical sector with COVID, for example, but they're quite happy here. They're basically saying, hey, look, Steward is in difficulty managing some of those cash flow requirements in the short term. Once again, MPW has been able to support their tenant, and Steward is now on the flip side of these circumstances and expects to be strongly cash flow positive starting in the fourth quarter of 2022. And so they're quite comfortable here, the fact that these are loans to their tenants, which they are going to profit from. So that's the bull case. Lots of reasons to be positive for long-term investments in MPW. What do you think? Give me a subscribe, hit that subscribe button, hit the like button, leave a comment down below. Is this convincing? Are you invested in MPW?